Hey, what's up, guys? Sam here, and I'll be doing the premium video for May 9th, 2025. So, another week is in the books. Not a particularly exciting week, especially with what we've become accustomed to in terms of these wide-ranging weekly candles. Of course, that's to be somewhat expected now that the VIX is compressing closer to 20. Of course, the fun goes back in the box when the VIX is 20 or lower. So, at least from a volatility perspective. So, kind of a nothing week so far. An inside week, right? You can see that last week's candle is right there, and basically all of the action for this week is contained inside that candle. Not really anything has changed here week to week. So, basically, the video that I put out last Friday would basically still apply. There's been there's not really anything that's changed here. Last week I gave you a level that I was looking at on SPX at 57.50. Basically, it's the extension. So if you want to find the extension yourself, you can connect these 3 points. And that gives you this extension target. On SPY, it equals 575.28. On the SPX, it's closer to about 57.50. But you can see here that it lines up with the daily 200 as well as the daily 100, right? So you can kind of see this, see these 3 points of interest right there, which basically is kind of like the target. Also, it lines up with this previous high here, where you came down, retested, and got pushed lower. So, not really a lot to update here. No changes to the indicators, right? You've had arrows for a while. That hasn't changed. You still are not positively crossed here. It's just a neutral chart. It's a negative 25 out of 100. On the weekly chart, it's another neutral chart, negative 20 out of 100. Zero changes here to the arrows, zero crossovers here, zero changes to the Squeeze Pro, zero changes to the Squeeze Pro over here. So it's a lot of just an inside week, and there really, frankly, isn't a whole lot to update. There is an expectation going into this weekend that they will be meeting with China to discuss some type of a trade deal. My concern with that is that it just has the vibe of something that could be buy the rumor, sell the news. Like today certainly had zero enthusiasm at all, and I was really kind of expecting a little bit more from the market today, just because I figured folks would want to be positioned in front of that potential news, and really it was just a whole lot of nothing. It was basically kind of a dead day for most of the day. So this weekend it will be kind of the big tell. I'm going to show you QQQ here in just a second, and then we're going to cover the Mag 7 index. I'm going to show you the reason why this weekend is actually more important than most weekends. Of course, you have the potential catalyst or lack thereof. Well, it'll be a catalyst. It might just be up or down. It's not entirely clear. But you'll see it here in the Mag 7 pretty clearly once we get to that. So Q is the same thing, right? It's just a stronger chart because basically, since the lows, tech has been what's leading. So negative 20 there on the weekly, positive 36 here on the daily, neutral up. So again, just neutral, but it does have an upward slant to it. And underneath price, you can see that the cloud here has actually gone green, which it went red right here. So that is something that has changed this week for this chart, so that helps, and that helps with this. That's the reason that this chart has a higher score currently than the SPY. But same thing here, right? Like this is the daily 200 on the QQQ, and you can see it is a point of interest in both directions. So you should have expected it to be support on the way up, and you should expect for it to be resistance on the way down. And at least so far, we are basically right with our face right against it. So aside from that, no changes at all to the indicators, no changes there, no changes here, no changes there or there. The only real material change that I'm seeing here on the Qs is the cloud has gone green underneath price. But if we zoom in, you can see that you basically are in just a little bit of a nothing pattern here as it consolidates underneath this 200. But overall, it's not a bearish look at all. It looks like it's consolidating underneath the 200, attempting to get through. Oftentimes when you have a pattern like this, if you can get good news as a catalyst, especially this weekend, then it can gap up and go. Oftentimes if you can't get through a major resistance level like a daily 200 on an index chart, then you can try to gap it up and go. And that would usually happen on Sunday. So this is the Mag 7 index, and maybe I stole a little bit of its thunder because I already showed you the Qs, and the Qs are basically very, very similar. So maybe I kind of stole my own thunder here. But this is a Mag 7 index, and you can see here there's a lot of empty space on this chart, and there's a lot of coagulation, right? And so where's the empty space? Empty space is here and here, right? And where's the coagulation? All through here, right? So this is where all the crap is. And if we zoom in, you can see there that there's a lot of resistance here. Doesn't mean it can't get through. It's certainly not. But the VWAP for the Mag 7, try to understand what this chart is. It's Apple, Amazon, Broadcom, Google, JPM, Meta, Microsoft, Netflix, Nvidia, and Tesla. So this is an aggregate chart of all of these companies, and just these companies, weighted by price, weighted by market cap, and balanced for price. And one of the more important levels possible is this magenta line. So this is the average weighted price for all of these stocks as a basket since the beginning of the year. That's what this magenta line is right there. The red line right here is the 200 daily, which we just saw in the QQQ. And then this other red line is a weekly resistance zone from back here on the weekly chart from a previous major high. So if I were to give you at least two of the biggest, most important levels on any given chart, it would be the anchored VWAP on the daily, as well as the daily 200. And it's not always common that they are basically overlapping each other. So again, just oftentimes if you can't get through it, it's going to do one of two things. It'll either A, gap down on Monday, or B, gap up on Monday. I don't really see just more malaise here. I think that everybody places their bets, and if you get a positive news cycle over the weekend, let's say the US and China are best friends on Monday, then I think you can see a gap up, and that would generally help things. Let's go to the IWM real quick. We'll speed things up here a little bit. I just wanted to spend a little bit more time on the big stuff. I don't really care that much about the IWM. IWM here, unremarkable. I don't particularly see any reason to trade that over tech. If we go to the DIA, same thing. Completely unremarkable, nothing to see here. Let's go to HYG. This is going to be junk bonds. So junk bonds here, again, whole lot of nothing. Unremarkable. Doesn't need to be remarkable though. It just needs to be stable. I don't like the fact that the daily 100 is crossing down through the daily 200. I don't view that as in any way positive. But overall, this chart doesn't need to go straight up. It just needs to be stable. And I think that's probably good enough for the bulls. Let's go to the VIX next. So the VIX here, we hardly knew you. I, for one, miss the VIX at 30. I have a lot more fun when the VIX is high than when it's very low. Although this isn't very low. No real signal here on the VIX. Again, another kind of lower close, just kind of going into this malaise pattern here. I don't really see anything here that's remarkable. Of course, all of this, here's the thing, we're going through all this stuff, but on Monday, the entire board will be decided, right? So notice how we're going through things, and it's really neutral. Like if you go back to the SPY chart, it was like neutral and neutral. The best one we saw was the QQQ daily, which was just neutral up. So even that one was neutral, it just has an upward bias. And so you're really neutral with the indexes, and they're pinned right against their resistance levels. So all of this conversation trying to decipher that, I think, is kind of silly, right? Because oftentimes on Monday, that's when the decision happens, and it'll probably happen right at the open, right at the Sunday open. Not even Monday. It'll be probably decided by Sunday night, and then maybe we'll get like some announcement on Monday or something. So for now, I'm not really seeing anything here on the VIX, although it's not going to be as friendly here, I would imagine, just because you have gotten down to the lows again here on the indicators. But overall, this is more of a bullish orientation for stocks, not a bearish. Slightly up here on the VVIX today. Back to a major support zone, but I'm not seeing anything really come to life there either. Let's go to the VIX futures. I wanted to look at all three VIX instruments with you, all three volatility instruments, the VIX, the spot VIX, the VVIX, which I think is important and underappreciated, as well as the VIX futures. And VIX futures here, just completely unremarkable. So I'm not really seeing anything there. They are back to their VWAP, by the way. So maybe that is a level that folks would start viewing volatility as attractive again. The magenta line is the VWAP for the year. So that is the average price paid for VIX futures contracts for the year, which is important. A lot of computers will key off of that. Let's go one step further here. Let's just kind of fill things out. So I'm going to check out one thing we rarely look at, and that's going to be the Aussie yen. This is the Aussie dollar yen, and you really want to see this go up. This is going to be very important for bulls to see this ideally go up, but even if it just trades sideways, that's going to be bullish. As long as it doesn't come down hard, then bulls would be in control. The chart here is not particularly good. I don't think I have to really point that out. You can see a downsloping 200 with price underneath, a very heavy, thick red cloud above the weekly price. But there is one thing that's going on with this chart, and that is you have this low here, which is a major low. If you stretch that across, you see how you have a trap here? So that's actually a pretty big deal. That's actually a pretty big deal because as long as basically this chart holds 90, and this is actually something that you'll be able to leave an alert on your charts. You don't have to watch this. What I would do though is I would put an alert at 90 on the Aussie yen. And as long as it's above 90, the bulls are going to be mostly in control, equity bulls. If in the event that it gets below 90 at any point, then it's going to be probably we're going to be looking at a trip back to the lows on the indexes. But for now, it's comfortably over 90. So I don't really see any issues there either. Completely unremarkable week as well for the Aussie yen. So not giving anything away there. Let me show you one thing here that I think is potentially actionable, because there was one thing that happened today that I was not a huge fan of, and it's right here. And actually, we don't even need the indicators. So one thing that you need to be aware of on the SPX is that there is an active bull trap at the moment. Right, so the fact that there's an active bull trap at the moment, it's important to understand both sides of this. So I'll do my best to explain it. We read a chart like we read a book, right, left to right. So this high, before we had the pull lower, is our reference. We mark it across. Conveniently, it's basically 5,700. So easy enough to remember. That becomes our reference point, right? 5,700. That's the line you see there at the top that says bull trap pivot. You see how you trade above it for a couple of hours there, above 5,700, and then today it goes back below. It's not really allowed to do that. What should happen here is it trades above it, comes back, ideally gives it a low volume kiss, and then is able to go that way and make a new swing high above that high. But it didn't do that. What it did was it traded above 5,700, and then pretty much the first chance it got, it went right back below it, and now it's trading back into this range. The expectation when you see that is going to be that it goes back to the bottom part of the range, minimum. Oftentimes it will breach something like this and then try to do that, right? So what's the bottom part of the range? Right around 55.80, 55.90. So that's the expectation. Here's the flip side. In the event that they're able to get back above 5,700, ideally without breaking, let's say, this support level here, In the event that they're able to get above 5,700, then it's off to the races, because at that point you have a failed trap, right? What you should expect is you have the trap, you trade below, everybody who got, everybody who bought up here is now stuck underwater at bad prices, and typically the market will flush them to the bottom part of the range, right? Oftentimes a little bit below that. If that does not happen and we go through 5,700 at any point, then it will actually create a pretty good, in my opinion, short squeeze to the upside. And we probably should look to play that at least for 50 points above 5,700, at least to about 5,750. And then we can make another decision from there. So going into next week, this is all the information that I have, is what's right here on this chart right now. Unfortunately, I don't have any close family members in China that can give me information as to what's going on there. So as I look at this chart, my expectation has to be what is the most common thing, which is we would come back to the bottom part of the range on Monday, right? We gap down, essentially. I have to expect that because I have no reason not to expect that. In the event that this actually turns out to be a false trap and we get above 5,700, and which is my preference, by the way, I don't have any shorts, but we get above 5,700, then at that point it would be off to the races. Okay, so that's kind of the way I'm looking at it. If we do gap down on Monday, I would not be interested in buying at all until at the very least this low here. But ideally, maybe even something through the low with a reversal candle, and then you get back above 55.80, and then that would set up a buy as well. So kind of a messy situation, very neutral. We had to read between the lines more than we usually do in these videos, which is not my favorite thing to do, because by next Friday, when I talk to you again, the board can look completely different. But this is the information that we have at the time that we have it, and we'll make the best of that as we wait to see if there's going to be a deal or no deal this weekend. All right, guys, so that's my time. If you're watching this on the YouTube, drop us a like. It helps us out a little bit. And for those of you in the room, I will see you guys back in the room on Monday. Have a great weekend, guys. Cheers.